which are as follows. So for sole traders and partnership, they have what? Unlimited liability. That means whatever happens to the business, it affects the owners of the business. If the business is going down, it could be the owners can go down also. So or whatever debt the business is having, it could be transferred to the owners of the business. That is for unlimited liability companies such as sole trader and partnership. Thank you. So what makes them different from the company? For the company has a separate legal entity from their owner. So the owner is separated from the business. The business is this, the owner is that. So whatever happens, they have a separate legal entity. I think that's clear. 2, they raise capital through the sale of shares. For limited companies, they can get more money by selling their shares. People will buy these shares, they will buy shares with money, so they can raise capital, they can get more money, they can inject more capital into the business, but they have to sell their shares. Selling their shares means they are selling part of the ownership. Do you understand? You are exchanging ownership for cash. I think it's clear. Is it clear, please?
Yes.
The third one, the debt of the business does not affect the shareholders. So whatever happens to that business, you cannot transfer the debt of the business to the owners of the business or the shareholders. No, you can't. 4, the company is responsible for paying corporation tax. What are corporation tax? Taxes on the profit you make by the business. Not the shareholders that have to pay. It is you, because it is the company, not you. It is the company that has to pay corporation tax. You know what corporation tax is?
Yes.
Taxes on the profit made by
The business.
Thank you. The fifth one, shareholders are entitled to dividends. So, as you are paying the tax to the government, you are responsible. You as the company is paying tax to the government, so as they have to share part of the profit made to shareholders, because shareholders have invested their money into the business, and they need what return on investment, which is profit sharing, called dividends. Is it clear?
Yes.
The sixth one. The company is unaffected by any change of ownership except through merger. If there's a change of ownership, maybe take over. If you are taking over another business, it does not change anything. And if the owners of the business, the shareholders of the business are leaving, the business still stays because it's what is a limited company. But if there is a merger, there will be a problem, because if company A and company B is coming together, company A has its own corporate culture. Company B has its own corporate culture. So they need to sit down and compromise. They need to sit down and arrange. They need to sit down to agree on how to run the business. So it might affect the company. But if this takeover does not affect it, is it clear? So what else do we have here? And that's all about the difference between unlimited company and